This has been the worst October in the crypto markets since 2018. But just how worried about that do we need to be? Traditionally, markets are supposed to jump in October. That's why we call it Uptober. But clearly, if you've been watching crypto, if you've been watching Bitcoin, you will notice that the markets are very much down this October. So today I want to break down exactly why that is and, in my opinion, whether or not we need to be worried about that going forward. But first of all, let's jump into the micro. Bitcoin currently trading at a price of $110,000. You can see basically a repeat today of what we had last weekend, right? Quiet weekend trading, low volatility, just a gentle range here between arguably $111,000 to the upside and $108,500 to the downside. The good news about that is the liquidation risk is pretty low on the micro and it is pretty balanced. Okay, so you can see here maxing out at about $250 million of short liquidation risk to the upside and about $250 million worth of long liquidation risk to the upside. Nice and balanced. Basically, with liquidation risk, the way I rationalize this is in terms of imbalances. Okay, so this means that there is leverage in the market right now, but it's balanced to the upside and to the downside. It means that traders on both sides of the market are leveraged to the same degree, and the risk of overextensions to either side of the market is about equal. If we zoom in, you could argue, based on this chart here on CoinGlass, that there is slightly more downside liquidation risk. That is, we are slightly closer to a long liquidation event, but really you're talking about relatively pretty small numbers, okay? So a differential here of about 60 million to the downside, and looking at similar price movements to the upside, worth less than that. So not massively concerned about that right now. You can see on the broader time horizons, if we zoom this out to the 30-day here, looking at Binance specifically, there is still a big imbalance to the upside, slightly smaller than what we've seen over the last few days, okay, or at least over the last few weeks. So you're looking at about $3.63 billion worth of short side liquidation risk to the upside versus ultimately about 2.78 billion to the downside. I would still consider that a big difference, right? It's a difference of about $1 billion. There are still shorts stacked up in this market. And why might there be shorts stacked up in the market? Well, once again, we keep getting hammered. Sentiment keeps getting bashed, and it keeps happening because of retail traders jumping in on leverage positions with money that they don't have, particularly on the long side lately, but on net, on the upside, right? People betting that the market is going to go down, and people generally getting demoralized that the market is going down. And that brings me back to what happened to October. So you can see here, Yahoo Finance, red October. Why Bitcoin just had its worst October in years. And we look at more data here from CoinGlass, you can see that we haven't had a down October since 2018, okay? Before that, 2017 was green, 2016 was green, 2015 was green as well, and then before that, 2014 was another red downtober. But that is three, now that we've just finished October 2025, 3 down Octobers since 2013, just 3. That's why we call it Uptober. Investors generally expect a rise in crypto and a rise in Bitcoin over October. But of course, this doesn't account for big market events, okay? That's a rule of thumb, and rules of thumb are made to be broken, right? Of course, we've got the elephant in the room, this massive, historical, never before seen $19 billion liquidation event, sparked by Trump's tariff threats on China and fueled by those long liquidations, okay? A lot of people jumping in leverage long, waiting for breaks of all-time highs, anticipating new breaks of all-time highs. I think it is totally fair to call that a black swan event, right? An event that we've never seen before, that no one saw coming. Although if you've been watching my videos, you will see we did warn of a risk of that, and we actually bet on a risk of that by getting into longs on that drop. And that is why I'm not particularly concerned about this, right? If we zoom out on the daily time frame here on Coinbase, I want to show you just what the market looked like back in 2018, the last time we had a down October. Look how far out I have to zoom here, by the way, to get to 2018. I think we're going to go up actually to the weekly chart here, just so I can show you that. And there you go. There's 2018. Sorry, October 2019. We'll go back a year. October 2018. Here we go, right? Very, very different market back in those days. Bitcoin trading at a price of less than $6,000 in October 2018. And there we go. I mean, I think, honestly, as I've said time and again on the channel, big sell-offs like this tend to prove to be big buying opportunities, right? We've seen Michael Saylor adding massively to his bags in this sell-off. We won't see, in my opinion, the turnaround of this truly until all of the leverage is swept out of the market. Okay, I think we're getting closer and closer to that point, although we do still see, obviously, longs jumping in on leverage, people borrowing money to bet on the markets going up, money that they don't have, and we do still see those people getting wiped out. But what we've also got to see is a general overall crushing of sentiment. And right at that point, there is nothing more to be gained by the big players waiting in the wings, holding back capital. If you think of it, if you were a huge institution or a huge whale, I think is a better way of putting it, with a lot of capital to deploy into the markets, you don't want to get that capital into the markets at a time when things are anything less than boring, because you have no pricing advantage, right? Big serious investors, big serious whales are playing the long game on these markets, and they're waiting for the most favorable prices to get in. So generally and honestly, I do see the first down October since 2018 as just another tick in the book of market sentiment being absolutely crushed. I think this will kill the spirits of a lot of enthusiastic retail traders, right? And only once the spirits of all of those enthusiastic retail players are absolutely crushed, or the majority of those are crushed, and it's very clear on the market, does it make sense for big money to come in and start giving us some buy-side liquidity. Once that does start happening, remember, we have got a lot of short-side liquidation risk to the upside that has been accumulating in the markets, not just now, but all the while that this has been happening, okay? Ever since that massive $19 billion sell-off, and even before that, and now, it's going to be going up and up and up, especially as we get big scary headlines like this one from Yahoo Finance, right? Red October. It's supposed to be October. It is not supposed to be Downtober. So that's why I'm not particularly concerned. I am still in my leverage long Bitcoin position. Expect slow trading over the weekend, right? The stock market is closed. There are a lot less serious investors trading on the crypto markets as well, even though we have a 24/7 market, even though we have access to perpetual futures, etc. Volatility just tends to be a little bit quieter over the weekends, at least over the last couple of weekends, right? We saw pretty much exactly the same thing last weekend. Down $3,000 in this position at the moment. That is a 1 Bitcoin position on 20x leverage. I have no plans of closing that just yet. In fact, I have plans of adding to that if we see further slips to the downside, further sweeps on liquidity, on liquidation risk, and I will be holding that until we eventually find buy-side liquidity. Obviously, with the caveat that I don't want to become one of these $55 million worth of long liquidations over the last 24 hours. If you're getting liquidated, you're not in the game, you're not playing the game, you can't win the game. So stay in the game as long as you possibly can. Don't try and be a sheep, try and be an outsider. Try and act like the big money, like the smart money that always tends to win. Don't act like over-enthusiastic retail traders. But, as always, just my opinion, just sharing it for entertainment purposes. Nothing I say should be considered financial advice. Thank you so much for watching. There's plenty more to come. Catch you in the next one. Bye.